Welcome back to another episode of me trading smart, managing risk while learning how to trade effectively. And today, I did not necessarily trade effectively. So we have to go back in and uncover the lessons that we can extract from the mistakes that I made today. In the beginning, it is normal to struggle, okay? If you're a beginner, you're going to struggle. I've only been trading ICT concepts in the live market for 1 month now, and I've been absolutely struggling. I'll admit it. I don't care. I don't feel any shame admitting that because I understand that this is a necessary part of the learning curve. And if you're new to trading ICT concepts or if you're new to trading entirely, then you should think the same way because there's a learning curve to everything. It doesn't matter what you're doing. Whenever you start something, there's going to be that period of struggle. And all you have to do is put one foot in front of the other and fail day after day, right? I said, yes, you have to fail in the beginning because you need to know what you can and cannot do. So that's basically what I do every time I take a loss. Every time I take a loss, I ask myself, why did this not pan out? Or if it works out, why did this pan out? And I'm extracting a lesson from every single mistake that I make. I do extensive journaling in this thing. This thing right here, I have a paper tablet. It's cool. It's a nice little electronic journal. And I do a ton of journaling in that. So today was a rather rough session, and we're going to get into that. But after I was done with today's session, I literally sat down and journaled for 2 hours, okay? It is so crucial in the beginning that you extract the lessons from your losses. And with that being said, let's get into it. So I hope if you're a new trader, that just gave you some kind of words of encouragement because I'm openly admitting that I'm struggling right now, okay? If you're struggling too, that is fine. That's totally normal, okay? You will get there. Just please take the time, journal, extract your lessons from the mistakes you made, and use them to become a better trader. That's all you have to do. And I understand that, which is why I'm not necessarily bothered by the losses that I take. Although it can hurt your ego a bit, you got to get over them. You have to learn how to handle losses if you really want to be a trader. Really, if you want to succeed in anything, you have to view failure differently. All right, let's get into this. Okay. Coming into today's session, my bias was bullish. Why? Because of the information that the overnight session gives us. Yesterday's session, we have a large down close range. If we go to the daily time frame, check this out. Right, we have a large down close range in yesterday's session. Now, if we look at the daily time frame, we can use this information as well. So this level and this level are a discount wick on the weekly time frame. If I go to that, here we go. If we drop quadrants on this wick, we treat wicks as inefficiencies, meaning we treat them like they're fair value gaps, right? And look how price is respecting the lower quadrant of that. Not only is it respecting the lower quadrant of it, but look how it drops down into the upper quadrant of that weekly buy side imbalance, sell side inefficiency. So notice how price works the lower quadrant in the previous week's candle. And when we drop back down into it in this week's candle, we work the upper quadrant and then we leave it, which is exactly what you want to see. You don't want to see price trade back down to the lower quadrant because it's already done the work there. So the fact that we're not trading down to the consequent encroachment, we're staying in that upper quadrant, that is a sign of strength. Now, if we drop back down to the daily, I don't even know what I was pointing out in the daily chart. I forgot. But anyways, look how this candle opens. We trade lower. We manipulate Monday's low, Friday's low, trade down into the weekly buy side imbalance, sell side inefficiency. Look at the work of the lower quadrant on the weekly discount wick, right? And then we see an expansion move higher. So what this looks like to me is kind of like a classic buy weekly profile where we have Monday creates a low, Tuesday manipulates Monday's low, and then we begin to see an expansion move higher. Although we have CPI and PPI later this week, which a lot of things could change with those highly manipulated events. So you have no idea, really. But let's drop back down into the 15-minute time frame. So on the 15-minute, what we see in the Asia and London session also indicates higher prices. Here's where we drop back down into that weekly buy side imbalance, sell side inefficiency, and notice how price is respecting the upper quadrant, right? So here's the previous day low. The first thing that we do in the Asia session is literally drop down and run the previous day low. And then if we look in the London session, we see very similar price action where we have these clean lows formed right here. See that? Relative equal lows. There's sell stops resting underneath these relative equal lows. Price drops down, takes the sell stops below those relative equal lows. And if we drop if we drop a fib on this wick, Look at the respect off of consequent encroachment. Look at that, right? So what would that indicate? Strength. And the fact that this candle right here can't even trade to consequent encroachment, what does that indicate? Strength. So not only are we doing damage down here, we are running out the sell stops below relative equal lows. Notice how all the bodies of the candles are closing above the weekly buy side imbalance, sell side inefficiency. So what does that indicate? Strength. The fact that we can't even trade down to the midpoint. We respect consequent encroachment of this discount wick. We're respecting the lower quadrant of the weekly discount wick. Can't trade down to consequent encroachment of the wick right here. Running out the relative equal lows. And then look what we see. Smart money reversal. We see large displacement right here. Market structure shift. Taking out this short-term high. These relative equal highs. We have a market structure shift. So this is a smart money reversal in the London session. So I'm thinking, given this information from the overnight session, that the low a day is already in. And if we zoom out, higher time frame, what do we see above the marketplace? Well, we have an original consolidation here. We have an original consolidation here. And what does the market do? We consolidate. So we're engineering buy side liquidity above these highs and below these relative equal lows. But what does it reach for first? It drops down and takes the sell side liquidity first. Boom, does that. And then we have yet another consolidation range. But in this range, we also have low resistance liquidity in the form of a trend line, which is a retail idea. And I'm going to fade that. Anytime I see a trend line, I love seeing that because I know I'm going to do the exact opposite, literally. So if we have a bearish trend line right here, then I know that I'm going long because I know that retail is getting short off of this trend line and they're going to place their buy stops above these highs and the algorithm is going to seek that liquidity, especially when we see this information given in the overnight session. So it's perfect setup. Especially when coming to the market at around or before 7 o'clock in the morning. I usually come to the charts around 6:30, 6:45. I see this large displacement, right? And this candle, this large down close candle, drops down into the higher time frame, buy side imbalance, sell side inefficiency. And then we see some displacement out of there. So this is where I take my first trade. Given the clear information from the overnight session, which is the advantage that you have coming to the market in the morning session, you can look back at what overnight did, and that can help you establish a bias for the daily range, right? So I'm thinking that the low day is already in, and I'm thinking at the bare minimum, price can seek the buy side liquidity above this high. And adding on to that, we have yesterday's opening range gap that was left unfilled. So there was a portion of yesterday's opening range gap that was left unfilled, this area in price action right here. So I still have that annotated because that's going to act like a magnet to price, and it did. Look how it literally jumped right for it, right? So not only do we have a lot of relative equal highs, engineering buy side liquidity above here and here, but we also have that opening range gap that was left unfilled from the previous day's session. So that's going to act like a magnet to price as well as the buy side liquidity. So it's like a really, really strong draw when you have relative equal highs and the opening range gap that is left unfilled. So I annotated that right here, buy side liquidity and opening range gap low from 10.724, and then here's the opening range gap. So I'm simply just annotating the portion that was not filled. So we failed to fill yesterday's opening range gap, and that was indicative of weakness, and the market sold off yesterday. But in today's session, smart money reversal in the overnight session, I'm clearly reading this thing is now strong, and it's now reaching for the buy side liquidity above these highs and the opening range gap in from yesterday's session, right? And here's another thing that I've learned about the pre-market session and market maker models. So notice how the market spends a lot of time inside of this large inefficiency. This is a large inefficiency from yesterday's PM session. Notice how the market is just spending a lot of time inside of it. So from what I've learned is that you always want to study how much time does price spend inside of inefficiencies, because you don't want to see them spend any time in it at all. You want to see it maybe drop down 1 to 2 candles inside of it like this and then immediately respond to it. But the fact that price trades up into this and just hangs around, trades sideways inside of this thing, is a good indication that this is probably not going to hold up and it's probably not going to work. Now that's not the case all the time, but most of the time that is what happens. And when price spends a lot of time inside of inefficiencies, that's also indicative of a high resistance liquidity conditions, which is basically what we saw up until the market left this range with displacement on this 945 candle. We saw that the market was very slow. The volatility was lackluster, and it was just really having a hard time going anywhere. It was just stuck inside this range, and that is because it's trading inside of this higher time frame inefficiency, spending a lot of time inside of it. So anytime you see price spending time inside of inefficiencies, that indicates high resistance liquidity conditions. But another thing that I've noticed is that if we're thinking in terms of market maker models, and here we have an original consolidation and a drop down, reaching for the sell side liquidity first, smart money reversal down here. If we begin to displace higher, and the order flow is switching from the sell side of the curve to the buy side of the curve, and the market spends time inside of an inefficiency on the left side of the curve, that is an indication that we will see another original consolidation form, which could also be the start of another later market maker model. But that also indicates that price is clearly reaching for buy side liquidity, because we are spending time inside of this inefficiency. Now, if we were going to respect this inefficiency, we'd trade up into it 1, 2, maybe 3 candles and then drop down out of it. But the fact that we're spending a lot of time inside of it is, like I said, an indication that it's going to fail. So if I see this price behave in this manner, trading into an inefficiency from the left side of the curve, that indicates to me that we are indeed on the buy side of the curve now. We're no longer on the sell side of the curve, we're on the buy side of the curve, simply because we're spending time inside of this inefficiency, which is not how you want to see it behave. And notice how price is not interested in the sell side liquidity below these relative equal lows, right? Why? Because this thing isn't a buy program, and it's aggressively seeking buy side liquidity above old highs. It's not interested in sell side liquidity. We know it's not interested in sell side liquidity because if it was, then we'd see a nice reaction out of this inefficiency, but we don't get that. It spends a lot of time inside of it. It accumulates. We form this range, this original consolidation, which could be a market maker sell model at a later point in time. Now, maybe not even this week, maybe this week, who knows, right? But it is just an area of price action to note that we have sell side liquidity below these relative equal lows that were left intact. But you can see how price was literally just not interested in delivering to these at all. So we just left it. And once we left this inefficiency, well, that's when we saw very fluid, liquid market conditions, and it just easily jumped up into the terminus of this higher time frame market maker model. So I was thinking here at the bare minimum, right? But here was the terminus of that market maker model, clearly. We touched that, we had a retracement, we even traded higher. And now the market is drawing for the previous weekly high, which is these relative equal highs from last Tuesday, a week ago. So, with that logic being said, let's review the trades that I took today. Okay. Now, all that logic I just outlined, that is how I was viewing the marketplace today. So my bias was bullish, clearly, right? Well, going into 9:30, I faded that bias, which taught me a huge lesson. So let's just cover that trade right now, okay? So post 9:30, my bias was bullish for the day. So why am I looking to be short? Well, number one, 2024 mentorship logic, the opening range gap is going to give us our initial bias for that opening range. The first half hour market open, our bias is determined by the opening range. If we have a premium gap opening, meaning we gap up from where we closed yesterday at 4:15. So if I toggle this setting on, if I go to regular trading hours right here in the bottom right corner, we can see that this is where we closed yesterday at 4:15 p.m. And the difference between that and where we opened today at 9:30 in the morning. So it's yesterday's settlement price at 4:15 and today's opening at 9:30. Okay. So 2024 mentorship logic, our initial bias is determined by the opening range gap because there's a 70% likelihood that price is going to trade down to the consequent encroachment of that. But in this case, it is not valid to establish a bias using the opening range gap because of that higher time frame market maker buy model. And given all this information here and given the information down here, price is clearly on the buy side of the curve, aggressively seeking the relative equal highs above yesterday's high, above here, seeking the opening range gap from yesterday's session. So ignoring all that information, that clear intel, I impulsively sold short once I saw the first percentage for value gap inversed, although not it wasn't necessarily ever inversed. It kind of just colored outside the lines a bit. But if we look at these following candles, look how the body's respected, right? So I impulsively sold short there, which is that's a bad habit that I tend to repeat. Actually, I think that just because the market is inversing the first percentage for value gap, that is an opportunity to get short just like that. And I've done that so many times, like a lot of times. So that is a bad habit that I need to fix. I need to get over that. And I was liking how price was closing below the minor buy side liquidity above this high. So I was reading that price action. Saw this get inverse, traded back up into it, and that's where I sold short. And I was using a 15-second chart. So get this. So I saw that we inversed the first percentage for value gap. We traded up into it here, wicked off the consequent encroachment. We had this large downrange candle. And I was going to use a fair value gap that I thought was going to be left on this candle. I thought this candle was going to close down here, leave a fair value gap, but it never did. And I sold short before that fair value gap even ever formed. Okay, so you can tell literally just based on what we see in the charts that this trade was very impulsive. I was very eager to get short on this move as soon as I saw the first percentage for value gap get inverse, and it was relatively early into the market open. So that is just something that I have to fix. Now, what I feel a lot coming into the 9:30 open is when that bell rings and the volatility picks up, I feel a lot of emotions. I feel like everything gets sped up because of that sudden increase in volatility. I feel like I'm in a rush. I feel like there's an emergency for me to see something in price action and for me to put a trade on. I feel in a rush. That's the perfect way to describe it. And so what I need to do is just learn how to relax and be patient and calm and just wait. Literally just sit back and wait. Because at the time, I was so caught up selling short in the first presented for value gap that I completely ignored my bias for the daily range. Now, price did not trade the consequent encroachment here. It didn't even fill this gap because it's busy and aggressively seeking the buy side liquidity above this high. So one of the morning session profiles that I've outlined or discovered is that in the overnight session, Asia, it's typically not Asia session. This is pretty rare, but usually in the London session, we will see some smart money reversal off of a higher time frame PD array on the daily or weekly chart, and then price will begin displacing higher. And if this occurs on a Tuesday or a Wednesday, which is usually a high probability distribution day in terms of the weekly range, there is a weekly objective that price is aggressively seeking. In this case, the 9:30 move is not a Judas swing because at 9:30, it's going to jump right to that weekly or daily chart objective. In this case, we see that, right? We kind of hang around a little bit, but price just jumps right for that objective on the higher time frame, which is the previous day high, completing this higher time frame market maker buy model. So we see how we manipulated Monday's low, ran the sell side liquidity underneath Monday's low, smart money reversal in the overnight session. And the move at 9:30 is not the Judas swing because if we look at the higher time frame market maker buy model, price has not yet delivered to its terminus and it has a daily / weekly chart objective that is aggressively seeking. So in this case, the 9:30 move is not a Judas swing and price is going to aggressively seek that objective. That's just a morning session profile that I've discovered. And clearly today I was fading that after the bell, right? Because everything just feels like it's a rush for me. I don't know what it is. I just need to calm down, take your time, go slow, you know? So if you have any advice on how to like slow things down, please let me know because that would help me a lot. All right, now here is my second trade of the post 9:30 session, which is simply price trading up into the previous day high, reaching that terminus, the external range liquidity for that 15-minute market maker buy model, right? Boom, delivers the previous day high. And what do I see? Well, there's an SMT with ES. I'm sure y'all know that. Everybody looks for SMT. And then we have an inversion fair value gap during the macro. So I'm selling short when the market trades back up into this inversion fair value gap. Now, the problem was this inefficiency resting below the marketplace. And notice how, like I said earlier, price spent a lot of time inside of it, which is indicative of what? High resistance liquidity conditions. So this thing literally just hung around forever. And once price started spooling for buy side liquidity during the macro, I was no longer interested in holding on to this trade. It was just taking way too long to deliver. And I did not believe that this was going to play out simply because it was high resistance liquidity conditions, which is another big problem of mine. Whenever prices in high resistance liquidity conditions, I don't handle them well at all. I literally start flipping shit. I go crazy because price is taking so long to deliver to my objective. I get mad, I get frustrated, I get pissed off. And the fact that we spent so much time in this inversion fair value gap as well made me lack confidence in this trade, because this is not how you want to see inefficiencies react. Like I said earlier, and if they are reacting like this, it's a good indication that they're probably going to fail. And the market is in high resistance liquidity conditions. It's just hanging around. It's taking forever to go anywhere. It's having a very hard time running for the obvious liquidity. I was targeting this low down here. Never got there. Hung around. Macro starts repricing higher. I take off break even. But it did end up delivering, and my stop was above the swing, so I never really stopped out. But I just wasn't willing to hold on to this because high resistance liquidity conditions. So in high resistance liquidity conditions, you're going to see retracements that are deeper than what you'd expect or what you'd be comfortable with, which is the case here, and which is why it makes me flip out and lose my shit. So that's something else that I got to deal with. Another problem with mine, which I will fix. All right, we're staying positive out here. We're not thinking negatively. Not thinking negatively at all. We're staying positive, and we will get through it. And then I had another execution here, which I don't have on this account because I reset my account because I wanted my balance at. So I wanted to set my account balance to reflect the 3 trades that I took today, because starting today, I'm working on actually trading soberly and following my trade model. Now today you can see that we are in 0.5% of drawdown after today's session. But I did execute a trade right, where was it? It was here. So this is what happened. This also taught me a huge lesson today, okay? So I see a smart money reversal inside of that 15-minute buy side imbalance, sell side inefficiency. I see a breaker formation, right? This inversion fair value gap, fair value gap. We have relative equal highs above the marketplace. So it's jagged down here, trading into that 15-minute higher time frame, buy side imbalance, sell side inefficiency. I can see that I have a lower time frame market maker buy model that is aligned with the higher time frame market maker buy model. So if you just drop down to the lower time frame, it literally shows the same thing, right? Smart money reversal. And I put my limit order right here. And I never got a fill, and price just kept gravitating towards my draw on liquidity. So what did I do? I started trailing my buy limit order up to follow that. And eventually I trailed it here once this inefficiency was inversed. The sell side imbalance, buy side inefficiency. I trailed it here. Market traded down, tagged me in. I have my stop below the order block right here. Not consequent encroachment, mean threshold of the order block. And the issue with this trade is that I was getting long way too high in a premium. Now price failed to accelerate through this high, had a retracement, and then a deeper retracement to clean out these relative equal lows, and also drop back down into, guess what? My original anticipated entry, right? So it did end up offering my original entry just later. So maybe a lesson that I learned from that is, yo, be patient, okay? I don't want to buy in a premium near old highs. Why? Because the market could potentially fail to accelerate through that high and then retrace into a deeper discount, then move in my favor. So instead of chasing the move, what I want to do is just simply wait for literally that same setup and price action. Just wait for it to repeat itself, literally, because what do we do here? We take out sell side liquidity below old lows, drop down into it, and then I think on the 15-second time frame, this is what I was seeing. I saw, where are we? We are right here. Okay. And then here's where we drop down into that 1 minute fair value gap where I wanted my entry, and we see the same thing. We have a smart money reversal. We also have a breaker, right? We have a low, a high, a lower low, and a higher high. And I see this strong displacement, and I was going to get long off of this fair value gap right here, but I didn't want to because the market was pretty lackluster at the time. It was just moving slow, low volatility. So I was like, I'm just going to wait until 9:30. I'm going to focus on trading soberly, trading slow, being patient, following my trade model. And yeah, Now, had I taken that trade, probably would have played out for what, 17 handles. I was targeting an order block on a 15-minute time frame, I believe, or I was going to target this wick down here. I was going to target very, very low threshold objective. So thinking how far can price trade beyond, and didn't even reach into that. Okay, so it would have came back on me for break even. And I probably would have just taken off here. Right there. Let's say 19, 20 handles, right? Low threshold objectives, and that's something else that I'm working on. I have to work on disciplining myself to take off at low threshold objectives because I continuously get greedy. I mean, there's just so many things that I'm dealing with right now. A lot of things that I'm dealing with right now. It's tough. It's definitely tough. It's definitely hard, but I know what I need to do, so I'm going to do it. And there's no way that I'm ever going to give up. No way. Ain't no way. Ain't no fucking way. No way that I'm not going to make this work. There's absolutely no way that I'm not going to make this work. I don't care how long it takes. I don't care how hard it gets. I'm going to make it work. Okay. So that's right for this one. See ya.